SPY or QQQ, which one has performed better over the past 5 years? Let's unravel this mystery once and for all. Welcome back, everyone. We have a very special topic for today. We are going to be talking about SPY versus QQQ. So if you were a long-term investor who wants to beat the market, or you just want to know which of these two ETFs is performing better over the past 5 years, then stay tuned because we are going to break down each one and everything that you need to know. And before we get into the video, make sure you hit the like button because it really helps out with the algorithm. So let's get straight into it. So first, let's talk about SPY. SPY is an S&P 500 ETF. It tracks the S&P 500 index, which includes 500 of the largest companies in the United States. The fund has a low expense ratio of 0.06%, meaning that it costs only $6 per year to own $10,000 worth of SPY. The average return of SPY over the past 10 years is 14.3%. This means that if you had invested $1,000 in SPY 10 years ago, next, let's discuss QQQ. QQQ is a NASDAQ ETF that tracks the NASDAQ 100 index, which includes 100 of the largest non-financial companies in the United States. The fund has an expense ratio of 0.2%, which is a bit higher than SPY's 0.06%. The average return of QQQ over the past 10 years is 18.7%. This means that if you had invested $1,000 in QQQ 10 years ago, your investment would now be worth over $2,500. QQQ's beta is 1.5, which means that it's more volatile than the overall market. Its R-squared value is 0.93, indicating a slightly weaker correlation with the overall market compared to SPY. Now let's get into the performance of both SPY and QQQ over the past 5 years. Both SPY and QQQ have performed very well over the past 5 years, but SPY has slightly outperformed QQQ. SPY's 5-year return is 15.8%, while QQQ's 5-year return is 15.2%. This means that if you had invested $1,000 in SPY 5 years ago, your investment would now be worth around $1,660. If you had invested $1,000 in QQQ, your investment would be worth around $1,920. Although the difference is not significant, SPY's slightly higher return can be attributed to its lower volatility and stronger correlation with the overall market. So if you're looking for an ETF that tracks the overall market, SPY may be a better choice. However, if you're looking for an ETF that tracks the technology-heavy NASDAQ 100 index, QQQ may be a better choice. Overall, both SPY and QQQ are excellent ETFs that have performed well over the past 5 years. SPY's slightly higher return and lower volatility make it a great option for long-term investors seeking to track the overall market. On the other hand, QQQ's strong performance and focus on technology make it an attractive option for investors looking to invest in the booming tech sector. When choosing between SPY and QQQ, consider your investment goals, risk tolerance, and time horizon. If you're a long-term investor with a high risk tolerance and a long time horizon, you may want to consider investing in QQQ. However, if you're looking for a more stable investment with a lower risk profile, SPY may be a better choice. Ultimately, the decision of which ETF to choose is a personal one that should be based on your individual circumstances. As we look ahead to 2025, both SPY and QQQ are poised for continued growth. SPY's strong correlation with the overall market and low volatility make it a good option for investors seeking a stable, long-term investment. QQQ's focus on technology and innovation also make it an exciting option for investors looking to capitalize on the growth of the tech sector. So what do you think? Which ETF will reign supreme in 2025? Let us know in the comments below. And don't forget to like and subscribe for more investment insights. Thank you so much for watching. We hope that you enjoyed the video and learned something new. If you did, please give us a like and subscribe for more content. We would love to have you back for our next video. If you're looking for more investment insights, check out our other videos on the channel. We cover a wide range of topics that can help you make informed investment decisions. See you again soon.